Well, good evening. I'm Ricardo Hausman, the director of the Center for International Development, and it's my real pleasure to present to you my very old friend, Luis Alberto Moreno, the current president of the Inter-American Development Bank. As you know, the Inter-American Development Bank is a multilateral development institution, a sister of the World Bank and the IMF, that kind of thing. They say the sister and not the friend because you don't get to choose your sisters, but the Inter-American Development Bank, as opposed to the World Bank, to become president is a little bit more challenging. It's not enough to contribute to the president's campaign. You actually have to participate in a very competitive vote. I think that the Inter-American Development Bank, in this sense, it's an example for the other multilateral development institutions. And Luis Alberto Moreno was elected last October in a very impressive campaign where many countries put their best candidates out there. And there was a very interesting and forceful debate. And the fact that he got elected says a lot about his strengths. And strength always comes from a good education. And where do you get a good education, right? If it's not at Harvard. So Luis Alberto Moreno is a Nieman Fellow in 1990. I wasn't here in 1990, so I didn't know him at the time. But I know Nieman Fellows now, and I can guess that 20 years from now, they'll be presidents of the Inter-American Development Bank, I guess. But I met him in 1992 when we were both in our respective governments. Luis Alberto Moreno was a Minister of Economic Development of Colombia when I was planning minister in Venezuela. And we in those days had very good relations, our two governments. We signed a free trade agreement. And Luis Alberto Moreno, as a show as a demonstration of true deep integration between Venezuela and Colombia, married our Minister of International Trade. So that's an example of how smoothly those negotiations went. After that successful stint as minister, President Pastrana appointed him as ambassador of Colombia to Washington. In those days, the security situation in Colombia was rather difficult, and the image of Colombia in the US Congress was rather low. And it was an incredible diplomatic achievement to have turned that situation around enormously. Between 1995 and when was the Plan Colombia approved? 1999. In 1999. In those 4 years of diplomatic activity, President Moreno was able to sell to the American people, the American public, and the American Congress the idea that the fight on drugs and that the security situation in Colombia were in the best interest of the US. And he got the Plan Colombia approved with 97 votes in the Senate out of 100, which is a huge achievement if you realize what it means these days where everything is approved with the narrowest of majorities, that there was the creation of consensus of a strategic alliance between Colombia and the US government. And I always perceived that was a personal achievement of Luis Alberto Moreno, and I used to say, and I've been saying that Luis Alberto Moreno was the most successful Latin American ambassador in Washington ever. And so it is not surprising that after such a major achievement, Latin American governments would have felt that somebody with those skills might do an excellent job at the Inter-American Development Bank, where he has just started last October in this very complex and important institution. So Without further ado, let me present to you Luis Alberto Moreno, the president of the Inter-American Development Bank.
Well, thank you very much, Ricardo, for that very warm introduction. I was here at the Kennedy School for some time. I see my dear friend Nick Metropoulos, who taught me that in a campaign, what really mattered was not the quality of the candidate, but the quality of the campaign, and I took that lesson to heart, and I guess that's why I'm here now as president of the IDB. But let me begin by thanking the Kennedy School, the Center for International Development, the David Rockefeller Center for Latin American Studies, and of course, my good friend, Professor Ricardo Hausman, for this very special invitation to share some thoughts with you today. I spent, as I said before, and as Ricardo mentioned, some of the best years of my life as a Nieman Fellow here at Harvard, and have really tremendous gratitude to this institution and to Harvard and its community for how it helped to broaden my horizons and for many unique memories and special friendships. It is therefore particularly gratifying to be in Cambridge and to have the opportunity to try to return in a small measure of everything I learned here while I was a student. I'm going to speak briefly about how we at the Inter-American Development Bank see Latin America and the Caribbean, what we perceive to be some of the region's key opportunities and challenges in this new century, and how we are striving to enhance the bank's ability to contribute to sustainable and equitable development and that of its borrowing members. Since one of my main objectives here is to try to motivate those of you interested in pursuing work in development anywhere, but especially, of course, in Latin America and hopefully in the Caribbean as well, and to consider a career at the IDB, I hope that in the closing section, it also serves as and it will take me some time to really make a pitch of sorts about the opportunities of this very great institution. We see attracting talented, creative, and committed people with a cosmopolitan outlook and a variety of experiences as the key ability of the IDB to fulfill its development mission in today's world. As you know, these are interesting times to be working in Latin America. In little more than a year, since October of 2005, more than a dozen countries in the region are holding presidential and parliamentary elections. The variety of these democratic expressions mirrors the great diversity of the countries that make up our region and serve to reaffirm that they are each pursuing their own path toward the common objective of social and economic development. From a historical perspective, the fears of a return to populism and a reversal of reforms do not seem to be borne out by recent experience, but also pale in comparison to the long-term significance of such milestones as the elections of indigenous and women presidents and the successful completion of an intense cycle of open, competitive, and fair elections in a region in which just 20 years ago, most people lived under authoritarian regimes. I often point out that in Latin America, the trend lines are better than the headlines. Indeed, incoming governments are inheriting sounder, more stable economies with the healthiest dynamic growth since the 70s. Thanks in good part to high prices for commodities, low international interest rates, and strong global demand, the annual growth rate for the region has averaged close to 5% in the last 3 years and is forecast to be 4% in 2006. Inflation, viewed in the past as a chronic scourge of Latin America's economies, is under control. The average inflation rate in the region fell to 6.3% in 2005, reaching 40-year lows. Countries have trimmed their fiscal deficits considerably. Last year, the average deficit was 1.4% of GDP, lower than that of most industrialized economies. Though many of the countries have yet to fully entertain the mainstream of world trade, to enter the mainstream of world trade, exports have risen 59% over the last 3 years. This, coupled with other factors like a recovery in foreign investment, have pushed foreign reserves up by $86 billion since 2002. Debt levels have dropped from 72% of GDP in 2002 to 53% at the end of last year. And foreign debt, another Latin American bugbear, is down to its lowest level in a decade, 32% of regional GDP. Growing levels of confidence are a key reason why the region's stock markets have lately been among the world's best performers, nearly tripling in value since 2002, and why Latin American government bond spreads, a measure of perceived risk, are at a record low of 230 basis points over US Treasuries. Another recent development is the emergence of Latin American companies as successful global competitors in a variety of sectors, from Cemex in cement to Embraer in airplanes. One of the most exciting prospects in this front is Brazil's parlaying of its status as an emerging agro-industrial superpower into world leadership in a sector as strategic in today's world as that of biofuels. A further event of great long-term potential is the growing economic clout of Latin American migrants in North America, Europe, and Japan, and how their remittances, which topped $53 billion in 2005, are transforming economic realities back home. All of these improvements are making a dent on poverty in the region. Unemployment is back to its pre-level crisis in 1997, and median wages have increased 13% in real terms since 2002. It is estimated that 13 million people left the ranks of the poor in the region over the last 2 years. It is clear, therefore, that external factors have played a key part in this recovery. However, I would like to underscore the role played by sound macroeconomic management. Unlike previous booms, most governments in the region, hailing from a variety of political stripes, have conducted, most of all, prudent fiscal and monetary policies, keeping inflation in check, and actively reducing government deficits and debt. While much remains to be done to reduce the historical vulnerability to external shocks, these structural changes bode well for the region's ability to cope when the economic cycle inevitably turns and for its longer economic prospects. All of these facts and figures put an optimistic face to the region, but I feel obliged to tell you another side of the story. The key human development indicators like infant mortality, life expectancy, literacy, and schooling have vastly improved over the last decades. The dream of prosperity and opportunity for the majority of Latin Americans remains elusive. In fact, although GDP per capita has increased by 50% since 1960, there has been little progress in terms of the percentage of people living in poverty in Latin America and the Caribbean. A major factor behind this is perhaps the region's most entrenched problem, which is that of deep and persistent inequality. The region's economies have not grown quickly, broadly, and consistently enough to raise the living standards of over 213 million people in the region, who by ECLAC or CEPAL estimates are still surviving below the poverty line. As a result, our region's democratic governments are contending with heavy pent-up demands and a broad array of unfulfilled aspirations of their people. And we face the challenge of getting on board the speeding train of globalization with some heavy baggage. A sizable share of the population is without basic utility services. Some 68 million people in Latin America lack access to safe water, and 110 million people to public sanitation systems. This is why, in an important way, close to 1,200 children under 5 die each day in our region. An undernourished population is also a problem. Although the region is an agricultural superpower with the potential to feed 1.8 billion people, and the World Food Program reports that 1 in 9 Latin Americans, that is 60 million people, suffer from hunger and malnutrition. Inadequate physical integration within and between our countries, which raises logistical costs and erodes competitiveness. Significant shortcomings in educational quality. While coverage has increased substantially, educational achievement remains very poor. Low levels of research, innovation, and technology adoption reflected in few patents and scant gains in productivity. Weak legal and regulatory institutions. Citizens and businesses are skeptical about the transparency and effectiveness of judicial systems. These and other of the region's shortcomings become especially apparent when we compare ourselves to other regions of the world, regions with which we must compete in the global economy. Latin America carries less weight today than it did in the past. In 1960, for instance, we accounted for about 6% of global output, and there we remain. In those days, our trade represented 7.3% of the combined world total. This has slipped to 5% today. And we have not narrowed income gaps with the developing nations. Our relative decline with developed nations, our relative decline in most patents is most patent when viewed against the backdrop of the Asian economies. The post-war growth of Japan and the Asian tigers has left its indelible mark on contemporary economic thought. And yet, these were relatively small countries. In recent years, the big economic story has been the reemergence and rapid expansion of market-based economies in both China and India. These two giants, home to roughly 4 of every 10 human beings in the planet, are growing by leaps and bounds. And I use the word reemergence because what China and India are doing is regaining their world economic primacy that they held before the Industrial Revolution. To speak only of the Christian era, China was the dominant economy in 18 out of the last 20 centuries. One central question for Latin America's future is whether China and India are partners, competitors, or more likely, a mixture of both. How do we ensure that we take advantage of their appetite for our raw materials while not relinquishing our ability to compete in markets for value-added industrial goods and services? But the rise is also relevant for other key questions the region needs to address. How do we foster more world-class, high-growth industries like Brazil's ethanol and flex car cluster? How can we best leverage Latin America's vast renewable and non-renewable energy potential in an age of carbon credits? And how do we move forward with the integration of our energy infrastructure? How can we take advantage of the growth of the Spanish language communities in regions like that of North America and falling technology costs to move aggressively into high employment industries like call centers and business process outsourcing? And how can we get migrants more involved with the development of their home countries, not only in terms of remittance flows, but in terms of knowledge transfer and entrepreneurship? How can we realize more value from some of Latin American unique global strength, like its diversity and richness in such areas as music, ecotourism, and biomedicine? And how do we balance the need for greater social cohesion and equality of opportunity in our countries with the high levels of efficiency the global economy demands? In short, what do we need to do economically, politically, and socially to make sure history and these emerging giants do not leave us behind, and that we provide more timely and effective responses to the just demands of our people? There are no easy answers to such questions, no universal prescriptions. Each country will need a homegrown solution looking to its economic democratic processes and institutions. And the path will necessarily be complex, involving taking risks, trial and error, and a lot of learning by doing. As Professor Albert Hirschman put it, in dealing with the multiple and complex problems of development, we have learned that we must be deaf, like Ulysses, to the seductive chant of the unique paradigm. At the IDB, we have felt the winds of change blowing through our region and our world. These winds tell us that business as usual will no longer do. As we strive to understand these trends and to improve our capacity to support the changes our region needs, we need to ask ourselves, what should our role be? Where do we add value in a world with abundant available capital? Should we be the bank of knowledge, ideas, and innovation? A bank to connect the Americas, promoting infrastructure, energy, and trade integration so desperately needed to make the region a global hub? A bank for social cohesion and poverty reduction in the Americas? And the Bank for Latin America and Caribbean competitiveness. We believe the bank, in a way, needs to be all of these things, for the challenges our region faces are myriad, profound, and vary from country to country. The issues in Chile are dramatically different from those in Haiti, and those in Belize a world away from those of Brazil. Crucially, the bank needs to assume its role as a partner in this endeavor with pragmatism and humility, not only because of the very nature of development and democracy, but because our resources are limited. Annual IDB funding flows today account for a mere 1% of total investment in Latin America and the Caribbean. Therefore, the bank's prospects for impact in the region will hinge on its ability to better leverage its unique strengths, such as its multilateral and cooperative character and its ability to take risks the private sector and the markets are unwilling to make, to add value to its services and marshal funding from other public and private sources inside and outside the region. Recognizing that development is a comprehensive process and that the IDB's main focus must be to respond to each of its member countries' particular needs, let me briefly refer to some of the areas where we believe we can add the most value. The process of globalization seems set to frame economic relations as well as many other aspects of our lives for many years to come. Therefore, we believe one of the central roles of the bank is to assist our member countries in both taking advantage of the opportunities that this brave new world creates and adjusting and responding to the costs and challenges that it will inevitably bring. By its very nature, the IDB is singularly suited to this task. By its size and breadth, the IDB is Latin America's preeminent regional institution, which makes it a privileged forum for discussing cross-border issues and launching common initiatives. At the same time, the fact that the bank has 21 other shareholders outside the region, including the United States, Canada, 16 European countries, Japan, Israel, and Korea, makes it an exceptional platform for engaging with the broader world and with supranational, supra-regional, and global challenges. The region can reap enormous benefits from deeper regional integration and the search for shared solutions to the development challenges. One key aspect of this is trade. There is a consensus among the vast majority of the nations in our hemisphere in support of freer trade in the Americas. Indeed, if the U.S. implements the free trade agreements with Panama, Peru, Colombia, and Ecuador, as may happen in the following months, we hope, we will in effect have trade agreements connecting all of the countries in the hemisphere's Pacific Rim, from the Bering to the Darwin Straits. The IDB is fully committed to helping advance the hemispheric trade agenda as a key platform for promoting competitiveness, furthering and anchoring reforms, upgrading enabling environments, and boosting regional growth. We also hope to intensify our work in other areas that go beyond trade agreements, such as financial integration, establishing supranational standards and institutions, and collaborative enterprises, such as coordinating the region's response to such threats as global warming and pandemics become key. One key element of the region's ability to reap economies of scale and compete both domestically and abroad is upgrading the physical infrastructure. The region not only faces challenges in integrating the economies in the region and global value chains, but also in reaching remote areas of their territories that are weakly linked with more dynamic and globalized urban centers. At the IDB, we estimate that merely keeping the region's infrastructure running to sustain organic growth costs about 2.5% of GDP, that is $56 billion per year, while bringing it in line with the rapid development of infrastructure in countries such as China or others in Asia and Eastern Europe, which would cost approximately 6% of GDP or $134 billion a year. Given fiscal restrictions to public investment in the countries and the magnitude of the needs, we are convinced that innovative solutions will be required. Key among these will be partnerships between the public and private sectors that align the interests of both sides and allow for risk sharing. The bank recently approved a change in its mandate that will allow it to better support these initiatives. Some of the most interesting opportunities in the sector, such as the Southern Cone Energy Ring, the energy interconnection from Mexico to Colombia, and the expansion of the Panama Canal, to name a few, are cross-border in nature or in their effects. The bank has much to contribute in large-scale, complex projects of this type, not only because of its substantial track record in such projects and its experience in addressing social and environmental concerns, but also as a regional multilateral institution, it is uniquely positioned to serve as an interface, an honest broker between governments and companies, between countries, and with civil society groups. We also believe the IDB has an increasing role to play in helping the private sector, which generates the vast majority of the investment, employment, and production in the region, to make the transition to an integrated global economy. Empowering the region's private sector, and in particular, connecting its thousands of small and medium-sized businesses into global production and distribution networks, is crucial for sustainable growth and for building broad opportunity in Latin America and the Caribbean region. To accomplish this, in the last few months, we have increased lending caps and broadened our mandates in terms of the sectors that we can work in. We have also launched an initiative to support the creation of centers of excellence around clusters where we believe Latin America can consolidate world-leading industries. We're also working to design new, more market-driven instruments and services that are better adjusted to the needs of our region's business people and entrepreneurs. A key area in this regard is the development of local currency financing. The bank has pioneered the issuance of international bonds denominated in Latin American currencies. Transactions such as these contribute to the development of local capital markets and pave the way for the region's public and private issuers to tap new sources of financing in favorable terms. Given the region's particular poverty and inequality challenges, we believe the bank must continue to pay special heed to policies and programs that enhance opportunity and protect the most vulnerable. This is especially true in a context of globalization, where the pace of economic and social change accelerates and there may be winners and losers in the short run. One such class of programs, which the bank has supported and which addresses the region's opportunity and human capital gap in an efficient way, are commonly denominated conditional cash transfers. These programs, which have been successfully implemented in many countries in the region, provide for small monthly transfers of cash to poor families, which are conditional to the families keeping their children in school and having their health monitored. Today, conditional cash transfers, as they are called, benefit more than 50 million people in the region, and independent assessments have shown that their impact on poverty and human development are significant. While we continue to support these programs and others in education, healthcare, and social security, we're also working to find new ways to better channel wealth creation opportunities for the majorities of the region's people. One mechanism is a push for what we call financial democracy. In the region, 7 out of every 10 persons and almost 9 out of every 10 businesses have essentially no access to formal financial institutions or their products. This results in shallow financial markets, which limit broad-based economic growth and help to perpetuate inequality. The task of providing savings, insurance, and credit products is in small individual quantities to millions of people can only be done cost-effectively and on a large scale through the use of new technologies. Moreover, the large flows of remittances from Latin American migrants provides a historic opportunity to incorporate millions of people into the formal financial sector. Currently, less than 10% of remittance recipients are estimated to have access to bank accounts. If remittance senders and recipients have bank accounts, they can have access to credit for housing, education, starting a business, and multiplying economic impact for millions of families. We recently approved the first remittances for housing loans in Mexico. We believe the IDB can serve as a bridge between migrants and their countries of origin. In addition to a source of capital, this diaspora can be a wellspring of knowledge and experience for development and social transformation as it has been elsewhere. It is fashionable these days to cite the problems of Latin America and suggest that the region has taken a turn for the worse. While there are problems to be sure, much as there are in every region of the world, the current negativism has two big problems. It is wrong and it is destructive. There are important positive trend lines in the region that outweigh the problems. Latin America remains more democratic than Asia, more closely linked culturally to the big export markets of the US and Europe, more in step with those regions on critical international issues, and thus a part of the world with special advantages to complement its extraordinary human and natural resources, geography, and recent track record. Are there challenges? Yes, to be sure. But listen even to some of the most controversial voices in the region, and you will hear that their mission is to address critically important issues of inequality. You may not agree with their methods at all times. You may not always like their rhetoric, but they reflect a real need, a real demand, and a real urgency within the Americas to ensure that development benefits all levels of society and to find ways to ensure that happens now and not in some trickle-down future for future generations. Furthermore, we need to remind ourselves and appreciate that those voices are the voices of elected national leaders, reflected another long-term trend that we should celebrate within the Americans, the spread and rooting of democracy. Any hemisphere as rich and diverse as ours should not expect unanimity about the approaches we take to our problems, or even that we prioritize our problems, but we should recognize that in such diversity, if we listen to it and take what is best from each position, we find the strength that makes democracy such a vital element of our collective futures. The test of all ideas from every part of the political spectrum is time. Time has led to a consensus among leaders that fiscal responsibility, market opening, the creation of opportunity for all, fostering competitiveness to a global standard, democracy, and similar subjects that were open to debate and even attacked not so long ago in our histories are now part of our regional DNA. No element is perfect. We continue to evolve in every area. We sometimes must retrench and reevaluate before we can move forward. But the people of the Americas and the world must appreciate the growing investment flows, steady growth, increasing market returns, stable currencies, paying down debts, all suggest that many of the world's most skeptical judges of developments globally have reached very positive, very encouraging conclusions about where Latin America and the region are today. They don't make the same headlines as some of the rhetoric and personal dramas and real conflicts the region faces. But these trend lines are more important. These trend lines reveal to us the headlines our children will see and suggest that with renewed efforts, we will be building upon success. Let me stop here and be happy to take any questions. Thank you very much.
Well, thank you very much. We have a few minutes for questions and discussion. As you know, there are 4 microphones in the different areas of the room, and you know the ground rules. Questions are something that finish with a question mark, and they come one per customer. So please.
Hi, my name is Russell Weinstein. I'm a junior at the college. I was wondering if you could discuss the lessons for development policy coming from recent political volatility and forced removal of democratic presidents, especially in the Andean region. In the Andean region.
I mean, the bank has worked with many countries over the last 50 years, with governments that are left-leaning, that are right-leaning, that are center. And I think the important thing is not to focus on one specific government. And the trick on development, of course, is to be able to do long-term projects. And that's what we do best. In this regard, what I find is that economic teams and the quality of the technocracy in many countries in Latin America has improved. And I think the result is really because of many of the crises that occurred during the last 20 years. So the lessons learned, I think, increasingly is to share precisely the lessons that happen from country to country to create kind of standards. And we're working precisely on how to better share that information related to lessons learned in development.
Zach Bookman, MPP, JD. There's a big debate going on in the U.S. Congress over the immigration issue, mostly with Mexico, but really with undocumented immigrants from across Latin America. And it doesn't seem like anyone's talking about the underlying issues at play, which is really the income gap between the U.S. and Mexico and the income gap and many other Latin American countries. I'm wondering to what extent your bank or your peers are looking at the underlying issue and how to address that. I know you talked about public-private partnerships. I think infrastructure is key. I'm wondering if you could just comment on that.
Look, before I answer that question, I'd like to acknowledge Senator Bob Graham, who is not only a good friend, but he has been one of the best promoters of Latin America in the U.S. Senate for so many years. And I think as Latin Americans, we should be extremely grateful for all the work he did and continues to do. And really great to have him here. Let me begin with an amount which I cited in the remarks. We estimate at the IDB that roughly $53 billion comes into Latin America from Latin Americans living outside of the region. It is hard to get a hard number on this, but people estimate that it could be as high as 25 million people, not only, of course, in the US, but in neighboring countries and certainly, of course, in Europe. The issue of how to deal with this diaspora, I think, is a great opportunity for Latin America. Yes, there is this income gap differential, but increasingly you are seeing how people, and India in this regard is a great example of how Indian Americans helped a lot really bring a lot of the development that India is taking today and really understood, markets such as the United States were, to a large degree, US friendly. And we're starting to see a lot of those remittances being leveraged in things like housing, which has a huge impact on development, in education products, in other words, people buying the education for a child, a nephew, whatever, or even adult education. And finally, related to the creation of small and medium enterprises, and in this regard, I think there's a huge world out there where we could have a role, and something that I was talking before with the center and what Ricardo is doing at the center, Professor Hausman is doing there, because I think is how to get the best of this American experience is something that can be translated back to these countries. The pressures of immigration will continue to be there, and I think people come here, they come here at the end of the day because they find a job, and they find a better paying job. But if our economies continue to do better, I guarantee you that pressure will come down. And what instruments do you create precisely for that pressure to come down are related to things like the leveraging of those remittances to do more productive type of activity in the countries.
You mentioned that business process outsourcing could be a tool for development in Latin America. All the countries are doing it, India, et cetera, et cetera. Is the ADP doing something in this regard, or other institutions in Latin America? Thank you.
I mean, there's many things to outsourcing. The first thing is that you need a level of education and language skills which are critical. Why is India so successful in outsourcing? First, the management of the English language, the fact that you had highly educated people, and many of those highly educated people were to some degree unemployed. And the combination of all of this made the outsourcing a very good possibility for India. Yes, there is outsourcing in terms of, let's say, the lower types, meaning pure telephone operators. I mean, this has been done in some of the countries. There are some things that, I mean, the best kind of outsourcing is the clothing Americans wear, which is largely made today, not only in China, which dominates the apparel business, but in a lot of countries in Latin America, largely in the Central American countries, and of course in Mexico. But let's say the upscale outsourcing has not come yet, and I think that's a failure of technology. And we often talk in Latin America, and I always discuss with economists, we always are talking about the next generation of reforms and income inequality. And you go to Asia, and what you find the discussion in Asia to be is about economic growth, education, but more importantly, technology. And I think the whole technology piece is missing, partly because, on the one hand, the universities do their own technology research, businesses do their own technology research, and governments do their own. And that needs to come together, like it's, for that matter, in the United States, where, as you know, is the majority of innovation happening today in the world.
Hi, my name is Gerardo Espinosa, and I would like to perhaps draw a comparison with the private sector to make my point and ask my question. Particularly thinking in terms of bank or financial institutions, it is normally the case that the CEO, someone akin to your position, would establish a long-term objective in terms of specific elements. Could be return on assets, return on equity, earnings per share growth, something that he's accountable for after a certain period of time. Particularly since you are leading the organization since last October, in terms of long-term goals, whether they would be financial or whether they be from a social standpoint, as you were mentioning, the mortality rates in the region, literacy and so on, does it make sense to articulate specific quantifiable goals that the institution wants to pursue and accomplish in a 10-year time frame, 5-year time frame, and be accountable to that?
It's a very good question. I mean, I see I have a mandate for 5 years, and as I see my mandate is, one is to bring the bank closer to the region, to focus it on the one hand on the gaps that have not been closed on the social aspects that that you just mentioned, and then on the others related to competitiveness, and that has to do with infrastructure, be it all forms of infrastructure, technological infrastructure, physical infrastructure. And these have to happen increasingly on a public-private partnership scenario. In terms of the assets that the bank has vis-a-vis the private sector, those can be easily accountable. In other words, you say, well, I want X% of share of private sector activity, and how am I going to grow those assets? In terms of what you do with sovereign lending is much more difficult, because it's embedded into the cycles of economic activity of the governments. Related to the kinds of programs that you do, what's the mix? In other words, how much is social, or let's say safety net related? We have a goal of 50% of our total lending to be related to social areas. And the rest, a mix of traditional, policy-based loans or investment loans. But it's hard in a development institution to put, the kinds of metrics that you would put in a private sector entity, especially because you are trying by doing. And development institutions have to be where typically the private sector and others don't participate.
Hi, my name is Javier Bolosin from the Fletcher School. I wanted to ask you two questions related to the relationship between China and Latin America. First of all, I wanted to ask you what you think is going to be the role of China in the development of Latin America, not only as a destination for export of raw materials, but also as a source for foreign direct investment. And how do you think the increasing presence of China in Latin America is going to influence the process of the FTAA?
Well, first of all, I think China is a challenge and an opportunity. It depends. Some countries have suffered from China's competitiveness. And on the other hand, those same countries have benefited from the appetite of China for basic raw materials. This is the case of, especially related to food or energy-related products. In terms of what it will do to the FTA, I don't know that it will really alter it. I still think that if you look, it depends what part of the region, but if you take, say, Central America and the north of South America, most of the trade is still largely with the US. As you go south, you go to countries like Brazil or Chile or even Argentina, the trade has been much more diversified, and you could say perhaps it's a third to Europe, a third to Asia, and a third to North America. And in this regard, I don't see that for the time being that the process of the FTA would be challenged really by China. On the contrary, I think increasingly Latin American countries are trying to diversify their export base, also included with what you would call South-South trade, that means regional or trade amongst countries, which is growing very substantially.
Good evening. With Alberto Moreno. My name is Hector Frias. I represent Quisqueya Foundation, a non-profit organization of Dominican Republic. Now, what about my country? I have a couple of questions. I would like to know your point of view of how the Dominican government is handling the economic policy. Another question, what will be the priority that IDB have for Dominican Republic in the future? Thanks.
Well, first of all, as you well know, I mean, there's been an amazing turnaround in terms of stabilization of the Dominican economy after the banking crisis that occurred some years ago. President Leonel Fernandez has done a fantastic job as far as we're concerned in terms of really taking on some of the economic challenges the country had. He's a very hands-on kind of president, and constantly is meeting with not only his economic team, but reaching out to international financial institutions like ourselves. We normally have a meeting with the World Bank and the IMF and ourselves with the president and his team, and they've done a very, very impressive job so far. I mean, I think the larger question is, in terms of the future, how should the Dominican Republic position itself? And you know, in this regard, you have many examples. You know, Singapore is a good example in terms of a logistics center, and I think there's some thought in that. 25% or more of GDP of the Dominican Republic today is related to remittances, largely from Dominicans living outside of Dominican Republic, mostly in the northeast of the United States. There is another area where some leverage can be developed. Tourism will continue to be a very important part of what Dominican does, and of course, I believe there's energy potential related to ethanol, given their closeness both to U.S., but more importantly, Central American and Caribbean markets, where they have largely, with few exceptions, are countries that have a big bill to pay in terms of energy, and with a few capability of production today.
Good evening, sir. I'm Zach Bongiovanni, a second-year master's student at the Kennedy School. I'm hoping you could speak a little bit about the BEAD's role in compelling private sector organizations to engage a bit more with corporate social responsibility as it pertains to Latin America. I know that there's certainly a great deal of backlash against the trade agreements, perhaps from a human rights standpoint, perhaps from a wage level standpoint, speaking directly to the element of consideration that wages paid to workers in factories in Central America and other places do not meet the level of standard of living required to sustain a family of four, even if two wage earners are working in the family. I'm just eager to hear your views on what you view your role as as a gap closer between some of the critics of the free trade agreements and the potential of the private sector to engage more responsibly?
This is a very good question, and we do a lot of this. You know, we are constantly working with organizations that are doing precisely what you suggest. We have a business climate initiative, which a part of it is precisely on raising the awareness on our corporate social responsibility. I have to say that increasingly I find that more and more in countries, this is an area where there's a lot of attention being paid. I don't know that a lot of action is being done yet, but certainly is in the radar of many of the bigger companies, and even in some of the middle companies in Latin America. And I think it's the realization that if there is no attention placed on this, the long-term outcomes of countries are really at peril. And so I see this as a very positive development. We are constantly working on this very area, and we have a special unit working on corporate social responsibility issues.
Good evening. My name is Jose. I am from Santiago de Chile. We have talked a lot this evening about public and private partnerships, trade agreements, and all that. And my question is, in your opinion, what is the role of the IDB with regards to the third sector, NGO, social entrepreneurship, microlending, etc.?
Well, as I was saying before, it's a very important element. You know, the interesting thing of an institution like the IDB is that about half of its shareholders are regional in nature, meaning the lending countries, and they roughly have a little bit over 50% of the shares of the bank. The rest are in the hands of non-lenders like the United States, Canada, Korea, Japan, and many of the key European countries. And therefore, the dynamic is one in which all of these issues are very much at the forefront because they are the interest of countries such as this. So we have a constant dialogue with, at every level, not only at my level, but down in the regional offices, reaching out to civil society for all these areas. And increasingly, civil society is a very big part of what happens in most countries in Latin America. So the issues of corporate social responsibility, reaching out, and especially, you know, an institution like the bank cannot do everything, but certainly it has the clout to call in and create the dialogue. And I think that's a hugely important part of what we do. And incorporating that into the mainstream dialogue at the country level. And we're doing a lot of this when not only as it relates to corporate social responsibility, on environmental issues, on the whole issue of clean energy and carbon, which is becoming a big one, indigenous people, the environmental policies, all of these are very much a part of our dialogue with the countries.
Yes, hello. Going back to the remittances, it looks like a very appealing way if you can take those $63 billion and you can leverage and put it to work, invest it instead of being consumed. Real estate, housing looks like the natural way to go. I would like to know what percentage of those remittances are plugged into housing upgrades or something like that. And if you can further comment, you were talking about there's things being done in the case of Mexico or someplace else. How do you put that money to work? Thank you.
Well, let me begin by telling you our research, what it says. For a family that receives today on average about $300 a month, and it varies from country to country, but it's roughly that. Typically about 30% of the money sent goes towards paying either rent or, for that matter, or could be a mortgage as well. So there's a very important piece of the money that's being spent on housing. Secondly, there's another area spent on education. The rest will always be, you know, food basically, and ways for, you know, just immediate type of consumption. We have worked initially, I'll give you examples. In Mexico, there's a program called the 3-for-1. And that means that in San Diego, to give you an example, the people from Zacatecas, Mexico, decide that together in that community, they're going to raise some money to fix the water system in their hometown. And they'll raise X amount of money, say $100,000. There is a program that's called the 3-for-1, in which they will go to the Mexican federal government and they will match that amount, that is another $100,000, and the same at the state level and then at the city level. And that's been a very interesting program. It's just beginning. I think it's a phenomenon of the last 2 years. But clearly this is a way for people to put money back into their communities and for the better good of the communities. There are financial institutions starting that have been doing remittances. And to give you an idea, the cost to a migrant before, say about 4 years ago, was that for every $100 that he sent, there were about $15 the cost of that transaction. I think a lot of the work that we have done, or we like to believe that a lot of the work the bank has done, has brought that down to less than half. There's still a lot way to come down. How is that working? Through microfinance institutions that basically terminate these transactions. The size of the remittances, which seem to grow regardless of the business cycle, means that other major banking institutions are getting into this, and they are the ones, in turn, that are creating the financial products. Because at the end of the day, what you want to have is more a transaction that is account to account as opposed to cash, which is the majority of the transactions today.
Thank you, Ambassador Moreno, for being with us today. My name is Tatiana. I'm a master's student here at the Kennedy School. And my question is, you've mentioned a few or several areas in which the IDB is involved in Latin America, several areas of weaknesses where we could do more. I was hoping you could pick 2 or 3 issues and say why the Inter-American Development Bank is better than other institutions, the World Bank or CAF, in doing that. And also not only compare those institutions, but also national development banks.
National governments, you say?
Yes, why the IDB, why we should work with the IDB and not other institutions.
Why you should work at the IDB and not in the national government? Is that the question? Look, institutions like these ones are not perfect. They have many constituencies. And development is not an exact science. You gotta really learn by doing. And this means that in an ideal setting, what you would like to see is that a dollar that you put in a project would bring in additional funding from private or public, for that matter, but ideally from other sources. And that a project that you participate in where you put a dollar, hopefully $3 or $4 comes from somewhere else. That's really the impact on development. And you're always at the crossroads of where there's market failures. I mean, you don't go and finance traditional businesses because it doesn't make any sense. They will always have an access to development. What are the challenges for institutions like ours is to be able to adapt quickly. And in big bureaucracies, that's very hard to do. On the other hand, constantly, all these questions that you have here around civil society, there's always kind of like the different pushes an institution like this has to be able to do many things. And as you do many things, therefore your mission becomes a little bit cloudy. And that's kind of the constant wrestling that you have to do to have that kind of focus. So are we perfect? No. A lot of our people constantly need to be more aware of what's happening in the countries. They need to be better able to listen. There's a generational change happening in our institution because of the nature of institutions that we are. And we're constantly reaching out to younger people to come in, and they seem to be very happy working there. Of course, you can always work for your government, and that's just as good.
Good evening. Thank you, Dr. Moreno, for that wonderful speech. My name is Shirley Carter. I come from the Harvard School of Public Health. And I just want to know what is the commitment of the Inter-American Development Bank with the indigenous people in Latin America, specifically in terms of health and education?
Well, I mean, for benefit of everybody, first of all, the indigenous people in Latin America in general are in a situation where they're in perhaps the more difficult circumstance. They are in the poorest areas of the countries with perhaps the biggest lack of public services, etc. What are we doing? Well, we have an indigenous policy. We're trying to put together a fund to help indigenous populations. We're going out and recruiting people that come from the indigenous groups directly from the bank, which we feel is an important way to create a positive cycle. But at the end of the day, the most important thing is to bring that issue to bear in the dialogues that we have with countries. In other words, when we look at our loan portfolio, when we look at the things that we're doing, this is a very important piece that should be contemplated.
Well, let's have our final question.
Hello, I'm Camila Chavez Cortez, and I am an artist. I also study leadership. But I'm interested to know what your comments are on the dynamics of the underground economy and how it affects Latin America's development.
Well, it affects it in many ways, in some good and some bad. The reality is that the informal sectors of Latin America are still very large. We are working with, and I'm sure you know Hernando de Soto, who's done a lot of writing on this. I know, for instance, in Mexico, we're doing like an atlas of the different countries in Latin America and what percentage of the companies or business activities in the informal sector, and in some countries it's as high as 90%. Those informal settings represent sometimes as high as 70%, 80% of employment. And definitely, the more that they come into the mainstream, the better it is for development. In terms of the illicit, which is a little bit of the point where you're going, the illicit trade that takes place, I think it's very difficult to calculate because it is country to country. I mean, it's very hard to estimate it on a more, let's say, regional number. There's a great book on this that Moises Naim, who's a compadre here of Ricardo, recently put out, which is very interesting. And there's increasingly a lot of talk precisely about the size of how illicit activity has globalized. And I would recommend it because he's done a great job with that book.
Thank you very much for a very enlightening discussion, and thank you all for coming tonight.